and running. Thank you very much, ladies and germs. Okay, happy Cinco de Mayo, at least a week in advance, because we're not going to probably be here at that time. At least I won't be. And I always like to get ready for it. Disclaimer, trading involves the risk of loss of capital, and what you should do is determine if any trading ideas are suitable for you and make your own decisions. Nothing here is presented to be a recommendation of any sort. Just letting you guys know what we see and the kind of trading that we do in our candidates. All right, without any further ado, let's get started. A little bit about my background. I'm an ex-U.S. Air Force fighter pilot. I have dual master's degrees in computers and business. I've been an active trader since 1998 and a full-time trader since 2009. I primarily use technicals, but I do use some limited fundamentals. And from time to time, I fill in moderating a hit-and-run candlesticks room, and I do provide one-on-one mentoring. Oh dear, sound is bad. And what does bad mean? All right, the hit-and-run candlesticks has blogs for the hit-and-run candlesticks rooms, the right way options room, and the live trade alerts. There's training going on there, and I will say right now that the live trading alerts LTA is one of the best scanning programs in live scanning that I've ever seen. It replaced a program that we used to pay $300 to $350 a month for, and it does a wonderful job. It's even better than that. All right, the agenda: we're going to do the economic calendar, earnings, market overview, going to do a few trade ideas, Q&A, the non-stock specific, and then we'll use what remaining time we have here to look at the stocks that you have. And please wait until I put the crosses out there and ask for stocks. And when you do it, only put one, and then let me know whether you're already long or short, or you're looking to go long or short. Okay, economic reports. The biggies this week is the FOMC. They meet on Tuesday, Wednesday. They have their meeting announcements at 2 p.m. on Wednesday, with the Fed chair at 2:30. We do have the red dots are important here that we've got. Let me see here, screen draw. 8:30. It says 8:30 and 8:31. Are they really a 1 minute apart? I guess. The red dots and the green dots are the important ones. Employment cost index, Case-Shiller reports from the housing price index, home price index, Chicago PMI, consumer confidence, and pending home sales out on Tuesday, which is a big deal. And the last three are after the market's open, so they could be market movers. We like to trade the petroleum report on Wednesday. Construction spending, ISM, and PMI all report after the open, 9:45 to 10:30. Jobless claims, the weekly, is out on Thursday, and productivity, factory orders, nat gas, I tend to ignore anymore. And I have no idea how the Fed balance sheet's going to affect us. I don't tend to trade after hours anyway. So now, Friday the 3rd. That is our monthly jobs report. Probably a little bit less of a market mover than it has been in the past. International trades at 8:30 and nothing else really. There is the ISM at 10. Not sure how much it's going to move the markets though. All right. We do have a lot of economic news coming up, as well as earnings. All right. Earnings calendar here. What I have here are the top of the top. the ones that I have just chosen to highlight here. What I do have is I've created a document. Do this every weekend of the earnings that show up that meet the criteria of price, average daily volume, and average true range. And I lump the night before plus the morning and call that, say, Monday afternoon after the close and Tuesday before the bell. They would all be on Tuesday. These are all the ones that meet those criteria. And I keep an eye on those. Those are my candidates for day trades. And especially those that have high short interest, approaching 10% or higher. Right, and that's why I have it as Wednesday trading, because I do not trade after hours. All right, so there we go. Let's do a look at the markets. Let's bring up this one. All right, I'm going to start with crude oil. We talked about these levels getting to, and with the volume at price levels that we went up to 64 and pulled back a little bit, and then we got up to this level here, kind of the 66 to 67 and a half, and we got up to 66 and hit the proverbial stone wall. We pulled back. Where do we pull back from? We went about 62.75, 62.5, and looks like we are attempting to bounce a little bit or pause. My stochastics RSI, which I use 7733 simple Wilders, shows that we still probably have another day or so to the downside or to the sideways mode. We are not yet going up. This was a pretty nasty sell-off on Friday, and that was based on no real news, but our beloved president had something to tweet or say about not giving anybody any break until tell OPEC that they needed to get their cost under control for oil. Gold, after it did its big run up from about 1200 to the 1350 or so, is now just kind of consolidating here. If I go to a weekly chart, you can see how we did this run up, and now we're kind of pulling back. We're pulling back up to this 1280 level. It's possible that we'll start moving. Hey coach, how's it going? Right now we're in a down move. We have not broken we haven't broken this down move yet, but we are in no danger of destroying the upward trend. This is probably, as long as we can stay above 1280 or so, 1275 on a closing basis, I think we're okay. That's just a pullback in an otherwise rising market. But we'll see whether that is actually the case or not. Right. They kicked the daylights out of them in the second game yesterday. All right, let's get on over to the equity markets. S&P approaching all-time highs here, I believe. Let's go back out a year. See if that is actually the case. Yep, right up in here. Okay, so let's zoom in. Whoops. Let's go into 6 months so we can actually see. We have been just riding this wall of worry up. We would have an occasional dip here, but stochastics RSI is really not helping. It just says that we're grinding our way higher. And in fact, if I look at the T2122, the 4-week new high, new low ratio chart. We got up into the pullback zone and did a pullback very slightly, but we're still kind of marching higher. And the breadth is getting a little lighter, but every time we get down towards that 50% level, we get a spurt of buying. All right. I'm surprised it's so low scoring in the game number 3 Sunday. Anyway, this looks pretty good. I don't see any sell signals yet. As long as we can maintain, say, above 28.88, we're still pretty good to go. Earnings has helped us out here in the last week or two. And we have the FOMC coming out here this week. Let's see if that puts a damper or kibosh on the rally. I have no idea, Walt. We'll have to just take it one step at a time, but it's kind of looking that way, doesn't it? Dow, not as pronounced as the S&P. We only got up to 26,525. The all-time highs are up here around 27. So we're still a little bit weaker. Okay. Yeah. These are the highs back here in October. This kind of looked like an inverted head and shoulders to you, maybe. I would get, you get two right shoulders if you're upside down, and the two left-hand shoulders are kind of skewed with. Yes, to infinity and beyond. I love Buzz Lightyear. All right, let's go ahead and look at the NASDAQ. And she's looking pretty darn good. It's actually led us up. The S&P is kind of falling in behind, but the NAS, as it normally does, is led the rally and the move higher. Okay, you see it pretty much matches the light blue T-line 8 EMA or the 17 EMA. Most definitely. And we've obviously had a couple of pullbacks along the way. Enough to scare us. Russell. Let's get the Russell here. Go to the 9-month. The Russell has not really participated in the rally that much. It did rally off the bottoms. It was the weakest, and it rallied off the bottom and recovered quite nicely. But then since about 1st of March, end of February, we really have gone nowhere. So VIX is down here around below 13 again. Still no fear in this market yet. We did get a little bit of the turn back down on Friday. I'm not going over the spiders in those. What I'm going to do is I'm going to go over and back to our slides. Okay, I've got about 7 long trade ideas and 3 short trade ideas. I will tell you, it was tough finding good candidates for both of them, primarily because the ones that have rallied they're not set up, in my mind, set up well for swing longs. And the short trade ideas, it's just kind of hard to short the bull market the way we're going. So let's go ahead and take a look at what I've got here is charts. The first one I've got here is Citigroup, and Citi's done a pretty nice rally once it got over about 66, and then it pulled back, and now it's continuing the J hook here. Friday would have been an ideal situation to dive in, but it's still not too late, really. Finding a stop might be the difficult part. Might suggest that we have to drill down to a 60-minute chart. And if we will pull below about 68.5, I'd want to be out. The first target would be the highs here around 70.50, 70.75, and then potentially breakout. Next one I've got here is Colgate Palmolive. We did have a huge breakout reversal here on Friday, and that was its earnings day. Earnings day 426. So, yep, I'd look for a follow through and a potential of a 45-degree run here, and watch for the possibility of 72.5 to be tagged and pause. Johnson & Johnson reports in July, so it's already reported. Over 140.75, I'd look for a run at least to the top of this candle here around 144.50, and maybe a little bit higher, depending upon the markets. And because it has a pretty high dividend, it might, even if the markets start to get a little weak, it may be a defensive play. Kimberly-Clark, huge jump up here on earnings, 100% retracement. I don't normally like those. I would love to have seen it hold a little higher here, but the possibility is that it could go back up here. Let's see, maybe about 130, 130 and a half. There's a little bit of congestion right in this area, right in there. So a conservative play would be to wait for the breakout above that and see if it's going to go higher. But all the while, you have to decide where your reward is and where your risk is, and where would you put a stop on a technical basis. So kind of tough on this one. Let's go back to the daily. OMC, Omnicom, nice move up, pull back. I think we retest this spike high here. I go back to my hourly chart, somewhere around 83.5. And the stop, okay, hold on a second. Stop would probably, in my mind, be below 80.75. If it doesn't keep going, I don't want to be in. B&G Foods, BGS. Why do I have BGS on here? Oh, basically the rounded bottom breakout, sorry. And I'm looking for it to go back up here into the $26 to $27 range. And I'm really looking for, if you get the traditional setup for the rounded bottom breakout, you're looking for at least 10% between the 50 and the 200. Right now, that is approximately 14.5%. What I've noticed is that if I see a kind of an equal spacing for the 100 period moving average, I could use that as an initial target. And what I do is I go over there and then look back to the left and see if there's anything around there. And sure enough, it pretty much matches the $26.60 to $27 area. So we could get up into that level and do a pause or a slight pullback. But this is a nice rounded bottom breakout. GPC is one of my shorts. And I'm looking for it really to break 103 and then drop probably down here below 100. Do know that we're possibly going to get some sort of reaction when we get to the 200. In my mind, the 200 only acts as temporary support or resistance. The stock is going to go where it wants to go. but that doesn't mean it won't pause on their way. So pretty. There, XLB. This could go either way. If we get back up over here around 57.5, I think we go back higher. Otherwise, if we get down below the 56.25, we're probably dropping into the 54s. I have two shorts here left. LPLA got up here to the 50. We're making a lower high. If you let me give me some poetic license here. These are lower highs, and this is a lower high. Now, we did a lower low, low, and a lower low. But some could argue that this was a higher low, and it is. So we're going to have to probably break this level right here around 71, 71.5, and then the $68 is in play. Like I said, very, very difficult to see and find a lot of shorts in the market as strong as it is. Grubhub, you do not like to see these huge black candles, bearish engulf. Anything below, say, 66.75 to 66.50 could be a short to at least retest at 63.75 and maybe lower. And if we look at the weekly, you can see that all rallies have basically been sold into. Let's go back to the daily. All right. Want to bring up the fact that there are 60-day trials offer for hit and run candlesticks or right way options. Doug Campbell there is probably the best options trader that I have ever run across in my 20-something years of trading. I think you could learn a lot by going in there and spend 60 days. And if you did nothing more than just learn how to trade options and begin your journey or further your journey. Okay, so think about taking advantage of either one or both of those offers. And I'm going to open it up. Okay, Bob. Let's look at 7733. All right, now I'm opening up for general questions that are not stock specific. And what you're asking for are the lines here. Now, if I do the edit here, I'm using RSI period 7, stochastics period 7, percent K3, and the second line is percent D. 3 simple. All right, did that help at all there, Bob? All right, you're welcome. Rickster says, I hear you speak of a stock, especially after earnings shoot to spike, and now it might do a 45 degree. Is there criteria you look for, or is it maybe just how they behave? Well, normally, let's look at, all right, this is our candidate for a 45 degree runner. And the reason I say it's a candidate is that in the run up to earnings in time, it basically moved up, and in the last 3 days it sold off. So what it did is it gapped up against the most recent trend. What I also would love to see is if this had extremely high short interest, and then you would get into a short covering rally, as well as those who are surprised by the earnings. Now, this one I'm almost going to guarantee that it is not, it doesn't have huge short interest. What I'm going to do is I'm going to look at Yeah, the short float's only 1.2%. There are places, the two places that I get that information would be on shortsqueeze.com. That says 1.3%. Remember, those numbers are a bit late. And FinViz. That's where it's the best I can do to get the information. And if let's just say you had 10, 15, 20% short interest in reported earnings, watch for the move up against it. I'm trying to remember. And I think Grubhub was one that, yeah, and Grubhub was the one that was gapped up on earnings and basically gave it up. So I keep track of earnings. Which one? This is 5.2. This was on Thursday, LPLA. Which one? There was another one I was looking at. Yeah, BGS reports on Thursday. And I think that's it. XLB doesn't have earnings. Okay. Any other general questions, not stock specific? Either how I do my charts, how I interpret them. Okay. What I'm going to do is I'm going to put up the crosses here. Feel free to put out one and only one stock symbol. Let me know if you're long or short. Thomas is ready. And then I'll do my best. And we're going to basically be able to spend about half an hour doing this, and then I'm going to have to move along. Okay, Thomas wants to look at BAC, Bank of America. Well, the first thing I see here, you're long the August 28 calls, okay? You're in the money, which I love. Don't like to see people buy out of the money calls. I'm going to do a 3-day chart here, and then a 5-day chart, which is the weeklies. You see, one, it doesn't move a lot. On a daily basis, it only moves about 50 cents. And we basically had a consolidation. We did the sell-off, and then the rally, and we had this congestion area here for the last week or so. It looks like we're potentially wanting to break out. My stochastics RSI is not telling me, give me any hints of which way it wants to go. Now, the balance of power is a little bit positive. So you've got 2 out of 3 things telling me that might be positive. Make sure you have a good stop. Okay. Bob S. wants to look at Amazon. Amazing Amazon. Just riding the T-line up. Reported earnings kept going. It's kind of hard to imagine this one stopping short of getting up to the 2000s again. There's basically nothing over here to the left really to stop us until we get up to 2015. And you see how stochastics RSIs are going up and down, but the price is basically either going up or pulling sideways. Not very much pullback. Michael K. asked a good question. Sometimes I use lines and sometimes I use boxes. The one that I used, the biggest one that I used a line was J&J, because it showed on the couple of 3 times we spiked up to that level. That would probably be also a box if I really wanted to be honest with you. But the 140.75, but heck, you could easily draw that area as resistance. but I chose to draw that as a line because that would be the number that I would use. Now, when I was looking at, okay, what was it? Kimberly-Clark. Yeah, I don't remember what we were. Okay. A lot of times, what I will do when I draw a, was that in BAC that I drew? No. Yeah, well, I draw that line right around here, congestion, because there's no one level. I could draw the line here, but I see it in my mind that this is a clump. So it's really, support and resistance is not one fixed price, but it's an area. But if I see it hitting a certain price multiple times, I'll sometimes draw a line. And I draw it a lot of the times based upon what I would be as my trigger to get in. Okay, moving on. Shop long. Gwen, do you know that Shop reports this week? April the 30th. And let me go on to my earnings. Shop is probably Monday after the close, or is it? No, Tuesday before the open. Right. So need to be careful with this one. Are you already long, or are you looking to go long? If you've got a lot of money in it, you may take some off the table. If you've got a very little in there, you may want to take all of it. Right now, the earnings are either all or none. Either they like them and they really continue to go, or they don't like them. Here, the expectations might be overblown. The reason I'm saying that, retail investors are probably being told by their brokers to go ahead and buy some in anticipating earnings. The balance of power is negative this entire time. That gives me some pause. I don't play earnings on things like this, but if I were to play earnings here, I'd be probably playing to the short side. With the stop above 227. Chad wants to look at XLK. Yeah. The index that keeps on rocking. We had the little dip here in March, another little dip here at the end of March, and we pulled back Friday. I'm not sure what stock or stocks did that to it, but it's still looking strong. Now, my stochastics RSI is up here at the top. It's implying that we need to go sideways or pull back a little bit. But if this one did the hammer and gets up and trades above 78, 75, I could definitely see going long. Bruce sees how to determine to stay in pending report days. I think I covered that just a little bit. A lot of it depends upon how much profit you've got in and whether you can give it some wiggle room. Lots of times what I'll do is I'll sell part or I'll protect it with, hedge it with options. Doug does a great job of talking about and describing and actually doing the hedging on his portfolio. And the other thing is, if I don't have a whole lot of profit in there, I'll probably exit and say I'll leave the speculation to someone else. Thanks, Gwen. That's a good idea. Okay. SP wants to look at United Health long. United Health has got to get over this 238.5 to 240 area. I'm going to pick out an area of the bottoms and tops. That little area right in there has been acting as support and resistance. We get up over the 240, we'll probably go to the next area here around 250. Nice round numbers. In full disclosure, I am long some leaps in United Health 2020. Looking to roll them out a little further. I think in the long run, our healthcare system is not going to be totally upended overnight. It'll take time, and we have no system in place right now to administer anything that the Democrats or Republicans could pass without using the health insurance companies. Now, that's technical. Sorry, that is fundamental or fundamental, and it's not technical. So you got a little glimpse of where I come from in that. I do have a little bit of an insight because my wife owns her own insurance agency, and United Health is one of the products that she sells for Medicare. And I base a lot of my knowledge on that. It's not inside information, but Tandem Diabetes Centers. We had our wedgie here that did not pan out well. I think we're going to have to get up over 65 and a half, and then I'd probably like this one. We had a very, very strong move up, and this was on earnings. You can see how the 45-degree rudder lasted for about 3 days, and then it ran out of steam. We did a pullback and then did another move up. So, in fact, in my mind, I'm seeing this as one J hook here, another J hook, and then we basically lost it. Now, got to be careful. Lower highs, lower lows. If this one does not come, the only way I'm going to see the trend change is if we can break this level here. Otherwise, we just made an equal high there. And the downtrend is still intact, in my mind. INOV. All right, thank you. Yes, it is 4:30, which is good morning or afternoon on Tuesday. INOV. Never heard of it. Health Information Services got caught up into the health, or the average to range. That's another reason, because it's below 500,000 and the average to range is small. I hope you're already long and you played INOV, Rick T, from down here. It looks like it's broken the downtrend. Now we need to probably get some sort of a pullback, establish another low and go higher. And it'll probably be right around the $14 level. $12.30, 300 shares. Okay. Nice. Nice trade, sir. Be careful that we're kind of running into this congestion over here, just under 14. XPO. All right, I'm going to put on. All right, no more symbols, please, so we can finish around 9 o'clock. So I can finish. XPO is most definitely broken the downtrend. There's kind of a rounding bottom, and there's a rounded bottom breakout back here. We got up to this level here, right around in this resistance level. Watch for a little bit of a pullback. Notice how the balance of power went from negative to slightly positive. It's not going to burn it up. Definitely if we could get over 69.69, a move towards the 200 would probably be in order, because I'm looking actually at the price over here to the left. 5-1, yeah, thanks, Richard. I don't think this should be a new position for you, though. All right. Email wants to look at PayPal. PayPal just, the stock just won't quit. Earnings is well enough out there. Wait for the dip, buy the dip. Right now, I don't see I could be telling anybody that I should be jumping in here. Something like here where we got that little hammer and a move back, a reversal period. Yep. Another reversal here, another reversal there, and another reversal here. So look at, all right. So you've got a plan. Trade your plan. All right. Cron. Now, Cron's starting to concern me here. We have definitely changed character. Let me show you the EMAs. I'm usually looking at the 8 and the 17. Whereas from January all the way through March, any of the dips were reasons to buy. Then we started to round off, and now we're in a downtrend. All rallies here are to be profit-taking events. There's no buy the dips here, in my opinion. If you can't see the trend, say can't see the forest for the trees, take away the trees. Take away the candles and just do the moving averages. And even though we're rallying a little bit here, this is no reason for us to go be going long here. I would say you've got to get higher high and a higher low, and then you could think about going long, and the trend will change. So what's happened is lower highs and lower lows, lower high, lower low. We've got to get to a higher high and then establish another higher low. Once we do that and turn back up, now we have a change in character. All right. Ta-ta. All right. And going a little slow here. Roger A, TSG. Oh, this one's kind of tough. It did do a pullback here. We did do the kind of the rounding bottom. The overall trend was lower. It's now, this is one that's now made higher highs and higher lows. Any move up over the 19 to 19 and a quarter level is a possible long. Where could it be going to? More than likely, I would see obviously the near-term swing, but maybe at a longer-term basis, 20 and a half. And notice how the balance of power has changed from being negative to positive again. Berkshire B, I think she wants to go up here. If you want to know where Berkshire's going, you have to look at XLF, financial sector, and it has a lot of insurance companies in it and some railroads. So primarily XLF. If you want to know where it's going, it's breaking out. It's probably headed 28, 28, or maybe even 29. So let's look back at Berkshire. This one doing a breakout from consolidation here. I'm going to get closing basis there. And you see the consolidation breakout. And I think she wants to go up here. Good call. Hope you're long already. Okay, Oracle. Oracle pretty flat, but going higher, just grinding higher. Not a big mover, 56 cents a day, average to range. You would probably want to be looking at a 3-day or a 5-day chart in Oracle. And you can see how we have a lot of wicks here on the weekly. Wicks again on the 3-day. And a few on the daily chart. I would say wait on Oracle if you're so inclined to get in, and wait for the dip. Wait for the dip, the turn back up with the stochastics in your favor coming up off the bottom near the 20 or 30 level. Okay. You're welcome, Michael. ExxonMobil gap down lower on Friday. Earnings and the threat of, I'll say sanctions, but I see that with a small s. This is not good. We were in an uptrend and now we gap down. This probably looks more like a short than a long for me. You didn't say which way. Stochastics RSI is pointing down. I think we could easily pull back into the high 70s here and then have to see what goes on. This week, the first couple of days is going to be important for XOM. Sigmo, next one up. Nice gap up. Was not on earnings. It was probably on some FDA news announcement. I'm going to guess. I don't know. I guess you'll know it. And we're below the V-stop. I'd probably want to make it get over 1275. Notice how the balance of power changed on the last 2 days. Even though price didn't make a big change, people are not as enthusiastic as they once were. That was tough until we get over 1275 in my book. It's going to be a tough one anyway. You're long from 1150. Hope you took some profits while it was up there, around 13 or so, because we're right now making lower highs and lower lows. You got to get guts to get back up over 1275. All right, Sigmo. Domo Gato. Well, back here it had high float. Let me see if it still does. Well, all right. Short interest. All right. In fact, on shortsqueeze.com, it shows 26%. So this is, any technical rallies will probably be bought. We did the gap up here and then pull back. We got people increase their short interest over the last few weeks. If we can get back over 40.15 to 40.25, I think she goes back up to 43.5 to 45. And we'll probably start getting a short covering rally. Right now, though, that said, there are highs, lower low, lower high, lower low, lower high, lower low. Right now, whether you take this one or this one, I would conservatively say that this one up here is our area we've got to get over. And get over that, we've already got the higher lows probably put in. Well, maybe not. We still need a higher low and a higher high. Watch for that to change. You can always go to the lines. Sorry, EMAs, and you can see where it's trying to change. Jonathan wants to look at Starbucks. I've had Starbucks in my wife's portfolio for a number of years. Dip back here was an add point. This right here was just a shakeout, especially on Friday where it dipped down. Are you already long? You said long. I don't know whether you're already long or looking to go long. Earnings are way out there, so it's not a factor. Balance of power really doesn't come into play with this stock that often. At least here lately, it's just kind of grinding higher like the markets. Stochastics RSI is not really helping us, but not hurting us either. Okay, look for a dip. Always look for the dip and then look for the buy signal after the dip. Buying the dip is not the only criteria. Just because it goes lower doesn't make it a buy. Going lower, in my case, with stochastics down at near the bottom areas right in here, meant that this right here was that move over 76 or so was a buy. Okay, CCK, the old Crown Cork. I owned that back in the 80s, 1980s. Nice good move up here, then a consolidation. I'll show you the 3-day chart. See how I did that? And then on a weekly, you can most definitely see that little pause. As it was trying to get, we were running into sellers somewhere around 55, 75 to 55 and a half. But now it looks like we're getting back over that. And somewhere over in here is going to be, yep, at 59 was the devil. I think it goes sideways to pull back a little bit more based upon the stochastics. Balance of power is not your friend. It's not hurting you really badly, but it's just not telling you that people are loading up like they were back here in February. Okay. Reggie wants to know what my opinion is on Shake My Head. Well, the gap down on Friday was not nice. Now, did it declare a dividend or something like that on Friday? Because XLK, it pulled back a little bit. Qs. I know you'd have to double check. It might have declared a dividend. Intel missed on earnings. Thanks. That wasn't a surprise to me. The surprise to me was that Intel was still going higher, leading into this. Intel's having lots of technical problems. If you follow the press, they are getting their head handed to them by AMD. Now AMD's going to report Tuesday. I think it's Tuesday after the bell. Maybe not. Yeah. Well, it trades on Wednesday, so it's Tuesday after the bell. And I believe AMD was one of my 10 percenters in shortness. Oh yeah, 12.15%. So watch for a rally in AMD. It's had a pretty decent run. So far, we've consolidated going into earnings. Watch for a big pop and a move back, possibly up to 33. This could be a 45-degree runner with a short covering rally if the earnings are perceived as pretty decent. Right. Thanks, Catherine. Totally appreciate that. I was out helping my mother on Friday, so I missed all of that. Okay. Walt's snuck one in on me with micro squish and had the old gap up on Friday. This one's probably not a 45-degree run candidate for me. This is a partial gap fill pullback. Let's just say that, now that's what I would expect. I'm going to use the quadrant lines. I'm going to go from right about in here. So somewhere in this pullback, 126.5, maybe even to the top to 125.80. But you can see how stochastics RSI just does not help at all. Balance of power helps a little bit, but not much. Xilinx. Now, was that in sympathy, or did Xilinx report and miss? And what do you base? It reported the night before up here and then went down. This is still showing lower. If you're talking about the comeback, meaning go back lower or bounce back up, I don't know which. If it got up to 126 and then shows any weakness whatsoever, I could call Xilinx a short. Yes, but that could be priced in there, Catherine, because it's up from 93.90. It got as high as 140, so it was up $47-48, 50%. All right, folks, I'm going to have to call it a night, and I wish you guys the best of luck this coming week. We do have FOMC out this week, so be careful. Wednesday, and earnings, of course. All right, you guys have a good one. Take care. Aloha.